Now we're going to talk about why they might be bouncing back. I still can't figure out why they took such a hit at 6 a.m., but I didn't spend too much time digging into the weeds of, what tweet or news event caused the sell off this morning. More so looking to see how the markets are trading on the news this morning following the jobs reports that just was posted at 8:30 a.m. Eastern. So far, it's been a bullish reaction to that. Again, when I first got up this morning, I was very excited, thinking we might get a pretty big market open this morning. But right now, things are pretty flat. I'm gonna actually update this deck real quick, just with the most recent futures numbers, and then we'll get rolling. Another thing too to notice, and I'll point this out in just a minute. Bitcoin's taking a pretty big hit right now. So we had that little flash up to 103, roughly 102, 103 on the spot price. It's now at 95 this morning. So, I mean, it's just been tumbling all week, which has been painful. Not a lot of fun, but it's a good buying opportunity. I still believe that. I made the majority of my returns last year on Bitcoin. I think that we've got another good year ahead of us, and then time to take some profits later in this year. So I'm going to take this screen share over. Good morning, Gregory. Alrighty, portion of the screen. There we go. All right, opening playbook. Deanna, do we have a logo for this one yet?
Not yet. I was going to check with the team this morning.
Oh, cool. I need some cool logo. That'd be cool. All right, let's go ahead and get started. Everyone, let me open up this chat down here just so I can follow along with everyone at the same time. Good morning, Steven. Alrighty. Well, as always, I'm going to give a market overview. We're going to look at the sectors, some internals, some seasonality, as well as some trades we can take together. I'll be placing trades with you guys live this morning. I'll follow up on last week's trades as well. Lulu looks great. The QQQ trade looks awesome still to me. Visa unfortunately took a hit, which was a bit of a bummer watching the rest of the financials do quite well last week, like American Express. Who was the other one I was trading? Oh, who was it? It might have been, if I can get this thing to work. No. Anyways, AXP was really strong. And after exiting, I was like, ah, shoot, we should have done that. Hey, Zana. But anyways, we'll dive into all that in a second. So here, real quick, I'm just putting this in here. This is my Telegram post of the week, aka the thing I want you guys to see the clearest. I posted this Monday morning. So we had a big gap up on Monday over the weekend. It was super awesome. People were getting pumped. I posted Monday morning in Telegram. Yes, Dave, I'm still in Visa. And Monday morning in Telegram, I said, we're still not out of this head and shoulders pattern just yet. I'm going to walk you through what that means if you missed last week. The gap up was amazing, but do not early celebrate. Look, this is what we call a descending triangle. So flat on the lower swings, descending on the higher swings. Typically a bearish setup. Now, if it breaks out one way or the other, you'll typically see it, carry on momentum in that direction. But right now we're about right here. Depending on today's price action, could go lower or higher. But if we break this 595, 590-ish level, I'll show you a more zoomed in picture here soon. I think we're going to break down to 575 on the SPY. Same goes for all the major markets following along with it. So let's do a quick futures morning, real quick. Yeah, this is just something to keep in mind. So something to keep in mind throughout the week. If we get a big gap up today or down day, just remember this is the overall pattern going on. Little morning update here. We had the initial jobless claims posted this morning at 8:30 a.m. If you followed in Telegram, given the fact that the markets are not pricing in more rate cuts, they're actually pricing in less than a 25 basis point cut now for the year, which is just crazy considering where we came from. I think what Wall Street wants to see now is a strong economy. Before it was kind of weird. It was backwards. They wanted to see a weaker economy, which would force the Fed to cut faster. I think now that the Fed has taken their stance and say, hey, we're actually going to take this battle against inflation really seriously. Well, now Wall Street wants to see a healthy economy that's not going to fall under higher rates. So we're going higher for longer. We're going to see how long we can squeeze this bad boy out. And the better the numbers are for longer, the better that the stock market will perform. So this morning, jobless claims came in less than expected. That's good news. That means less people needed jobs, needed work than we expected, which is a good, healthy sign for the economy. Here's the futures this morning as of just a moment ago. But I mean, again, these things are all over the place. I'll show you this. So here's the futures this morning. NASDAQ up. NASDAQ's up, gold up nicely. I'm going to talk about gold for a second and silver as well. It's a potential breakout. But look at this, already shifting from the open. Now the NASDAQ is down, or from when we started. NASDAQ's down, Russell's down, Bitcoin still down badly, but mostly flat here across the board with gold making a small move higher, Bitcoin making a bigger move lower. Now this week, we have more economic data coming out. Again, I'm going to post this link in the chat for you guys. This is where I get my economic data from, the economic calendar. Tomorrow, the markets are closed. That's why we're doing this today on Wednesday. Typically, we would be doing this on Thursday. Markets are closed tomorrow for Jimmy Carter, day of mourning. So we obviously aren't going to be live trading anything tomorrow. That's something to keep in mind. But on Friday, we have the unemployment rate coming out, which is a similar report to what we saw this morning. The market's going to be really watching that one. It's a 3-star report here. It's one of the bigger ones that we'll see on any given week. But next week, it's going to be even crazier, in my opinion, because we have the PPI on Tuesday, which is going to be a big number. But the biggest one is CPI, which is going to give us the best view of where are we at with inflation. We want to see this number lower than expected. So year over year, we want to see below 2.7, or at least at 2.7, but preferably below that number. That's going to give the Fed more of a green light to start cutting rates, which again, rates getting cut is a catalyst for the stock market, catalyst for small caps, catalyst for bonds. It's a very good thing if we are not in a high inflation environment. If this number comes in higher than expected, again, we'll keep an eye on it. We'll cover it next Thursday. If it comes in higher than expected, I would expect the markets to take a pretty big hit, a pretty big dump, a lot of volatility to continue coming in. This is going to be the biggest number we're going to see in a while. Obviously, I'm going to show you about earnings coming up. That's going to be the next market catalyst as well. But this is our next big real look at inflation. And that'll be on Wednesday next week. So this is just something to keep in mind. I posted that link in the chat for anyone who wants to track the economic calendar. Last week, I showed you how I set mine up. So I just go US and I go 3-star events, which are just the most impactful. Just because there's so many events, it's hard to keep track of them all. That's the way I do it. For the charts of the week, these are just fun data points I come across during the week that I like to share with you guys. So here, there's a lot going on here. But here, we're looking at what is called the January barometer, which basically says if we have a rise in the price action in January, how does the stock market do the rest of the year? If we have a positive January, typically the markets go up 91% or 91% of the time for the rest of the year. So 91% of the time, if we have a positive January in the first year presidential cycle, we have a good overall year, 18% average change on the year. If we have a negative January, look how different this is. In the first year presidential cycle, we actually have a down year typically on record. So this is a really, really big number. The January barometer, seeing how we finish in January. This next line down here is the Q1 barometer. So if the Q1 low price in the S&P is above December's low price, so let me go pull December's low for you guys. I'll pull my screen up here if I can. So basically, let's go to SPY. I'm going to go monthly or weekly. Let me change it to month. So we're going to see what December's low. We already hit below the low. So look at this. Here's December. The low price you can see right there is 580. Look at this number, 580.91. The low price in Q1 so far is already below 580.91. All right, so that means the low is lower than December's low. Let's see what that means for the markets typically. Well, if it was above, which it's not, it would be 100% win rate that the stocks are going higher. Since it was below, this is what gets me a little bit nervous right now. Look at this. The average return when the Q1 low is below the December low and the New Year presidential cycle, it's a negative return on the stock market that year. The odds of the markets finishing higher are 36%. I hope you guys see why this was such an important chart of the week to bring up. So here's what I found in the article. He's watching whether the index first quarter low undercuts the December low. That just happened. That's an important indicator in the first year after a presidential election. So this is really, really important. A lower low. So if it was a higher low, which would have been awesome, 100% win rate that the stocks go up the rest of the year, 24%, that very bullish year. However, a lower low saw an average decline of around 4%. That means, again, we're not going to be able to predict the future with the crystal ball here. But do you guys see why this is so important to keep this in mind? This is not a positive sign for the markets in 2025. That does not mean we're going to drop exactly 3.7%. Could be worse. It could be better. We could finish higher. There's still a 36% chance we're finishing higher. But it's just something to keep in mind. And I'm going to walk you through the seasonalities as well. Moving on to some other charts I like this week. A reason I'm still generally bullish on the stock market is just because there's so much money on the sidelines with the big tech companies. They are full of cash and they are in an arms race for artificial intelligence right now. Here you can see they're spending each calendar quarter on AI. It's just going higher and higher. The only small dip we saw was right there, kind of at the tail end of that bear market. The companies were probably starting to say might need to hold on some more cash in case we get a recession. Well, now we're out of the woods there, and look at this. They're going balls to the walls here on big tech spending on AI. I think that's going to pump a lot of money into a lot of different companies, giving us a lot of opportunity as well. Continue to create investor excitement and enthusiasm in the Mag 7 stocks. I think we're going to see a blow off top here in the Mag 7 stocks here soon this year. Now, let me cover a little bit what I talked about last week. Historically, January is bullish seasonally. It's a good month to trade, average 1% return in the S&P over the last nearly 100 years. But my favorite chart of the year, and it's a little bit messy. I'm going to get it remade for you guys. Taylor, who works on our design team, who is awesome, is going to remake it, make it way cleaner so you guys can print it off, put it on your desk. This is my favorite chart of the year. This is the post-election year or post-election seasonality for the S&P 500. Again, over almost 80 years here. So there's two lines that matter, and this is why I'm going to get remade. I'm going to get it remade so we don't have to see the black, blue, purple lines or orange line. It's just going to be real nice and simple for you guys. We're going to see the average of all post-election years. That's the green line. And then the average of post-election years after the incumbent party loses. So that would be like this year. New party coming in, new president. All right, let's look at the green line here. Again, I'm going to get it remade, so don't worry. Pretty flat January, a little dip in February, a little dip in choppiness in March going into April, and then we get some good bullishness throughout the year, right? That's all post-election years. So that's doesn't matter who won, doesn't matter if they're first term, second term, that's just all on average. This red line, however, is what is more specific to this year, and it lines up with that, with this the January barometer, the Q1 barometer that I showed you earlier. It actually lines up. So look at this. Typically, markets start to dip at the beginning of January. I talked about this last week. I said let's be smarter with our position sizes. It's not an extremely bullish moment. Stocks valuations are pretty lofty. Prices are near all-time highs. We haven't had a good dip in a while. We're way above the 200-day moving average. Seasonally, it's a weak period. Decreased position sizes. We're kind of seeing this right now. I expect to continue seeing this trend lower, and I'll show you the charts and why. Again, that descending triangle, it's all kind of matching up perfectly. However, we could get a nice little bounce here, seasonally speaking, going into February, and then a potential another dip. And this could be that dip down to that 200-day moving average, which we really could use. That would be really healthy and really good. Now, we should get some bullishness during the spring going into summer, right? But if you look at this over the long term, from March to October, again, this still isn't very positive. Bullishness, choppiness, downwards, sell in May and go away, right? Literally, if you sell in May, according to this, and go away till October, you're doing pretty good. That'll be something we'll be talking about later in Q2. But then to finishes the year strong, which would be really great to see. Overall, though, not a super bullish year. So given this price action here, given the fact that we kind of are seeing inflation come back, we're seeing the Fed stay higher for longer, and we have this Q1 barometer where the low is the low is below the December low, meaning it's, more often than not in the past, that's a negative sign. I'm overall a little bit skeptical of the market. I don't want to go overload myself until we get a good flush out. Then I'll feel confident to go back in to ride some waves higher. So again, let's do a market overview here. Technically speaking, here was last week's analysis, the head and shoulders pattern that I pointed out in Telegram. If you're not in Telegram, I'm going to post that link in chat. You got to be in Telegram. This was in December. I told you guys right here, head and shoulders pattern. I looked to take some profits. Markets ended up tumbling lower. I'm going to give you another update here. Last week on the show, I said, look at this. Stock market's near all-time highs. That's great. But the RSI, the relative strength index, is seeing lower swings. So instead of trending higher and higher and higher here in tandem with the market, we're seeing it trend lower and lower. So this is right now trending lower and lower, just like we saw back in July, lower and lower, which ended up doing that little August flush out that we saw. Similar pattern here. So where we stand this week, let's get a little update here. Again, we're seeing this downwards trend on the RSI, just like we saw back in July, and we're seeing a descending triangle. So this again, this is a pattern that basically says if the S&P breaks out above this number here, which is what 590 598 or so, should see increased bullish. This is just technically speaking. If we break below 580, I think we're going to 575 easy. I think that the deeper pullback case would be at the 200-day moving average 551. But I wouldn't be shocked, again, going back here, if we see a little flush out to 575, maybe 570, a bounce back, and then that deeper flush out to the 200-day moving average. So that would look like this. It would come down here, break it out lower, resettle, come up a little bit, and then flush out to the 200-day moving average. That would be really healthy too. People are going to panic, all that good stuff, but it's going to be a really great buying opportunity, just like this was a great buying opportunity if you were at that August 6th class, the mother of all pullbacks. We kind of jumped in together. It was a lot of fun. Ended up being great. Here's some other news right now in the markets. I've said it a couple times today. The markets are officially cutting in or are pricing in less than a full basis point cut. So here, if you look back at December, pricing in between a 25 and 50 basis point cut. Now they're below 25. That's because the Fed has come out and said that with inflation still being a little bit sticky, they're going higher for longer. Again, the markets don't like the fact that rates are high. They're wondering how long can the economy hang on with high rates before it crumbles. And that's kind of the game the Fed's playing. How long can we hold it high without ruining the entire economy or forcing a bunch of layoffs, which would be really ugly. Any questions so far? Post them in the chat. Overall sentiment, let's look at kind of the technical internal readings on the markets. Here, if we're looking at the percentage of stocks above the 50-day average, this kind of gives us a barometer for where we're at. With 50-day moving average is a good one to trade off of. If a good strong stock comes and touches it, it's normally a good buying opportunity. However, as you know, most stocks aren't outperforming the markets this year. It's been a pretty unhealthy market in 2023, 2024, where only 25% of the stocks are beating the S&P. That's why you see a number like this. So we're looking at the percentage of stocks above or below the 50-day moving average. Only 35% of stocks are above their 50-day moving average. So to give you an idea, this blue line here on the S&P, I'll go back here, is the 50-day moving average. Most stocks are somewhere in here or lower. Only a few stocks, only 35% of stocks are up in this range. So if that gives you an idea of the equal weighted, S&P is more so down in here, down trading here. The real overall, every company equally weighted, where Apple and NVIDIA aren't taking the lion's weight of the shares. So overall, it's a little bit bearish on the 50-day. However, again, this is more of a quicker moving number here. It's not as big of a number as this 200-day moving average. Now, this one really stands out to me. So right now, we're on the 200-day moving average, only 51% of stocks are trading above their 200-day moving average. That means while the S&P, again, is way above its 200-day moving average, it looks really good and strong. Most stocks are, well, half the stocks are above, the other half are below. So it's a very split market on equal weighted. That shows that a few stocks are carrying it higher. This has been a topic of conversation for the last year, 2 years, where the Mag 7s are really just dragging this market up. Most stocks are not doing so good. And that, again, we see one sort of bubble pop with those big, lofty valuated tech companies. The whole thing can go down pretty quick. That said, I'm not in total fear mode yet, but this is something to keep an eye on. It's just an overall look at the health of stocks. We saw this flip, actually. This narrative changed back in August. If you look here, we talked about it. We had almost 70% of stocks above the 200-day moving average. That was a really, really healthy number. But now we're kind of going back to unhealthy land where most stocks haven't recovered from that August dip. Look, it's almost the same number from that August dip. August dip, this is what I'm talking about. Most stocks did not recover from this. Only a few. So that's something to keep in mind. The put call ratio is still bullish for us. Again, a reading over 1 would sort of turn our head bearish. Most people know that the stocks tend to go up, so typically this number should be below 1. That means more calls are being traded than puts, which again, calls are a bullish option, puts are a bearish option. So I want to see this spike way up here like we've seen in the past, for me to get a really excited about a buying opportunity. Here was that spike on August 5th that kind of triggered my big call to, hey, let's go buy the markets. It was only a 1.25 reading. Here's a 1.3 reading. This was just before the elections, just people hedging themselves. But in a downtrending market, if we get a break lower and we get this reading above 1.2, 1.25, that's going to be a good time to buy. Another cool little tool, I'll post this in the chat again. I really like this because it takes a lot of market data and calculates kind of our fear factor. Where are people at? Are they greedy? Are they extremely greedy? Are they fearful, neutral, or extreme fear? Again, we're almost at all-time highs. We're still not that far off, but the market's in fear mode. This was as of yesterday. I typically like to buy when I see extreme fear. When this thing flips down to extreme fear and the market is still healthy overall, that's typically a great buying opportunity. In fact, again, I keep saying Telegram. If you're not in there, you got to be in there. I posted, it must have been back a few months ago, where there's an indicator that looks at CNBC headlines and all the, investing.com, all the different media outlets, and it says when 50% or more of the headlines turn fearful, that's the time to buy. So when the media is just now getting around to it being fearful, that's typically our best buying point. So in a nutshell, I've said a lot here. I'm not super bullish right now. I'm more bearish than bullish. That said, I'm not shorting the markets. I'm not doing anything crazy. I just want to see a little break lower so I can get a little bit more confident buying entry where we're not, at peak highs, where the upside outweighs the downside. Let's take a look at the sectors really quick. This was fun, updating this. I'm going to show you guys what we talked about last week and how that's changed this week, or actually not changed, more so played out based on what we talked about. So here's another one of those charts you're going to want to screenshot, print it off, have it on your desk, have it on your computer. This one, as well as the presidential cycle one, are my favorite ones right now. So we're looking at the sector seasonality by month. Here's January. Obviously, I'm not going to go through all these. Infotech is really hot. Staples is low. Materials is not very great. I also like to see the ones that have continuation patterns in the next month. So like utilities, 0.5% lower this month, 1.5% next month. That's a pretty good sign that maybe that's one you want to avoid. Versus one like consumer discretionary is strong this month, strong next month, strong the next. This is a solid, this is really healthy. Versus one that maybe flip-flops. You might not want to be in one that's just flip-flopping. One that trends nicely would be a good opportunity, in my opinion. So last week I said these are my 3 favorite long: XLY, XLF, XLK. Again, here's what they are: discretionary sector, financial, technology. The ones I liked to the downside were XLU, which is utilities, consumer staples, and materials. And let's see how they moved. You'll see XLU and staples both moved down last week. The ones I liked the best still stayed the strongest. There was no change in movement, but we saw industrials, utilities, and staples move lower. So it's cool to see that we picked out utilities and staples, and sure enough, over last week, they both moved lower. 2 that made moves higher. Energy bumped up 2 spots, and this isn't technically one of the sectors, but it's cool to keep an eye on the semiconductors, just because there's such hot stocks right now with AI. That ETF moved up 2 spots as well. So let's see where energy's at on here, actually. So energy typically has a bullish January, a bullish February, very bullish Q1 going into Q2. That could be a fun one to maybe play speculatively. Now, there's a lot going on geopolitically with energy, with Trump coming in, wanting to cut all the energy costs. But this is seasonally what it looks like. It is currently making moves higher on the week over week. So that's cool. So this week, again, I'm just going to highlight the same ones I like. I like discretionary, which is XLY. I like technology, XLK. Don't love utilities. I don't love staples. Again, those both moved lower last week. A wild card play for you guys would be healthcare. It's way down overall. It took a beating. Personally, I think on the RFK news with him pairing up with Trump and going after healthcare companies. But here, it's a bullish one for January. It's down low. We can maybe see a squeeze higher on healthcare stocks. So I just put that in as a wild card. The reason I put financial in blue is because we have earnings coming up. So next week, banks start their earnings events. Next week on the show, we'll be looking for any big orders in the options market on these earnings stocks. Could give us something fun to trade speculatively as well. But the reason I didn't say that XLF is my must go-to buy is just because earnings are going to either be hit or miss. They're either going to shoot the thing higher. XLF will go way higher, or it'll probably dip lower. We might see a move in between, but either way, it's just going to be a volatile coin toss. So that's why I picked discretionary and technology for this week. And I'm just going to let XLF, the financial sectors, play out because banks are starting to report next week. Alrighty. We'll keep on moving down to the nitty gritty. I'm going to give you the top Apex signal of the week. Last week I gave you Amazon. I still think Amazon is a great buy. Let me pull it up here. Sorry, I've got so many chat windows open. Yes, this will be recorded. We are going to do live trading here in a second. After I get to these. Sorry, again, I've got so many windows open. So here's the one I gave you last week, which was Amazon. I'll pull it up just so if you guys missed that one. It's an Apex signal. It's been a really good one for us. We had a little bit of a dip over the last week. You guys know this, but I think that it's still a great buying opportunity. Mark this one down for you guys. Amazon profit target price is $254.75. It's about 10% from here. Stop price would be 181. This is a weekly chart for those of you not familiar with Apex. So this isn't like a day trade or a quick flash and go trade. This is going to be a little bit more drawn out. Let me pull up the card. Let me pull up the cheat sheet card on the Amazon so I can tell you the average. So Amazon, this is cool. This is a cool thing about the Apex, in my opinion. My screens did not like it when I change them. So with Apex, we get this little cheat sheet card. Amazon, just so you guys know, it's 183% of the time there's a signal. Average return's about 7%. So that's winners and losers. Makes sense why this one's going to be about 10% because your winners have to be a little bit bigger than your losers. I just lost my card. The average return or the average hold time, though, this is what I want you to see, is 12 weeks. So this isn't something that you're going to day trade or, buy a weekly option on. You would be looking to buy options, 3 to 4 months out. Or I would prefer doing a wrap order that expires in, let's say, April. Maybe pick the April monthlies on Amazon if you're going to trade this. You could also do a out of the money options play on Amazon. So let me go here. So if I were to trade this, I would personally wait for the markets to open, but I do something like this where I'm selling the 225 call and buying the 220 call. This is the April expiration. So this gives me that full 12 weeks for Amazon just to basically move 1% or more. Our average return is 7%. So it should definitely clear that. If you want to be a little more speculative, what you would do is you pop out here to say our profit target is 254. So let me just go right under the profit target. I would sell the 250 call, buy the 245 call. This is trading at 128 with a $5 max selling point. So 5 over 128. That would be a 290% gain if Apex is right. Do you guys want me to type that in the chat? I'm just kind of walking you through how you can apply the Apex to your trading, and hopefully it's helpful. Christine, yeah, I will be adding more tickers. I've been so busy during this Q4 and going into New Year's. All right, I'm going to do Amazon wrap order. All right, let's see if it's going to. Oh, okay. Let me just type this up on my notepad, and then I will send it over to you guys just because I accidentally always hit enter here. All right, Amazon wrap order. We're going to buy. Actually, let me just put the expiration. 17 April 25 expiration. Buy. 220 call. Again, you wait for the markets to open. Maybe give it a while, 30 minutes or something, so you're not going to get crazy fill. Look for around 250 debit. 100% profit. All right, here comes the wrap order. This is a debit spread, Lulu. This is a wrap order, so we're wrapping the price of the stock with 2 calls. We're also cutting down the price dramatically. If you want to trade the calls here, $1,600 a call. That's if you got in on the good side. The bad side, $1,700. All right, markets are open. We'll let it settle a bit, but look at this: $1,800 for one call option, $1,700 for one call option. I just gave you one where you can trade it for $253, so $200, $250 instead of $1,700. That's what's cool about the wrap orders. Let me also give you the Amazon Elite orders, what I call it, just out of the money, where we're trying to marry it up with the move we're expecting I'm typing this up for you guys. I'll post it here in the chat. Around 130 debit is what it is. Raphael, I think I'm going to start doing some training sessions on that if that would be helpful. All right, here comes the elite order, which is just an out of the money debit spread, guys. This is just us betting that, hey, I'm going to bet Amazon or Apex is going to be right. We're going to get to April, which is a ways away here, and it'll be up in this range. If Amazon's here by April, you make 280% return on investment on a 7% move on the stock. So not a crazy move for Amazon, and you make 280%. Again, the reason I picked that is because if I'm looking here at Apex, I see it's a 12-week hold time, average return 7%. That's something you can feel comfortable with. Now, again, that one has a higher chance of losing. We're further out of the money, but it's higher risk, higher reward. So there you guys go. All right. Now that I did that, let me give you my new pick for this week. Some weeks will come back and it'll be the same pick. Some weeks it'll be different. This week I like Meta. So here's the information on Meta. You guys can see it here. It's an Apex entry. Meta's down, wow, 1.5% today. The profit target price, 667.43. Stop price, 499. The reason I like Meta right now is I don't know if you guys have been keeping up with the news on Facebook and what Mark Zuckerberg's up to, but he's totally flipping sides and trying to team with Trump, kind of like what Elon did. I'm interested to see if we get a Trump wave sort of thing on it. Like we saw with Tesla. Does everyone remember what happened with Tesla after Elon and Trump kind of did their thing, went straight up? Meta's already a strong stock. It's already gone higher and higher. It's a very good setup. Look at these swings. Very nice swing. And with, technology hot and Zuckerberg teaming up with Trump, I think this may benefit from that. So that's why I like it. Hot sheet pick of the week. Guys, this is my seasonality stock list pick of the week. Again, if you don't have the hot sheets, it's free. You just pay for shipping. We send you the sheets in the mail. And they give you different seasonality windows where stocks typically go up. So on the 7th, which was yesterday, ServiceNow, ticker is NOW, was a seasonally strong stock. It's a very strong trending stock. It's down from the highs. I'm personally trading this right now. I really like this stock. It's a 24-day hold time. So that would be the end of the month, January 31st. Average 6.7% gain. So again, you could use the wrap order calculators and put a nice trade on ServiceNow with the expiration at the end of the month. I think that'd be a great trade, great opportunity. Just let me check when earnings are really quick. Gotta flip back to a daily chart. Earnings are on the 29th, so don't pick the 29th or don't pick the 31st expiration. Maybe do the 24th expiration of January. It's a cool opportunity. I posted the link for the hot sheets in the chat if you guys want to get more of the seasonal picks. Something that you can just have there on your desk. It's pretty cool. New momentum Newton picks. Do I include weekend days on the hold? Yes, the hot sheet should include the weekend days on the hold. It'll show you, it'll just say buy, January 7th, sell January 31st. Momentum Newton picks. Again, Newton is my momentum rating indicator. One that I really like is Citigroup. This is a stock I was trying to remember earlier. When I said we were trading financials, I liked financials last week. I picked Visa. I wish I would have picked AXP, which is American Express, or a Citigroup, because they did much better than my man Visa did. But I'm still in Visa. However, Newton just flipped green on Citigroup. It looks good. It looks like it's going to break out. Keep in mind, earnings for banks are coming up, so this is something maybe you could trade into earnings. I personally wouldn't hold it through earnings, but if you want to, be my guest. United Airlines has also been a very strong stock. Momentum just flipped green on United Airlines as well. I personally would write this one down on a watch list and look for the breakout at all-time highs, or at the 52-week highs. So right now, if I pull up United Airlines, let me just pull up a basic chart. Here's where we're at. I like this stock right now. Momentum's green. I personally would wait for it to break above 105.12. I believe is the price. 105.09 for UAL. So that's one to put on the watch list. Put an alert, right click, set an alert, at or above 105.12. Let me put this on here, and then I'll bring it up next time it hits it. It's 09, actually. 105.09, I'm going to set an alert. Create that. And so now, if we break above the highs, momentum's green, we can trade this one for a breakout. All right. Everyone get these. So the two long ones I like, Citigroup, United Airlines. For shorts, I gave this one last week, AEP. Still downtrending, still negative momentum. This is one if you want to hedge yourself short. Again, this is in the utilities sector, which remember this. We picked utilities last week. It continued going down. Seasonally, utilities is not good for the next 2 months. So that's why I like AEP to the downside. I also like FCX to the downside. This is a material stock. Again, also downwards momentum. We've seen the materials. Let me find it. XLB. There we go. Materials right here, down towards the bottom. And also materials is negative seasonally for this month as well. So AEP, FCX to the downside are the two I like there. Link not working for the hot sheet. Let me click this. Should work here. You just come in here and you say, grab your free copy, put your information in. I think it's $6 for shipping or something, and we'll ship them to you. All right. Any questions so far before I keep moving? Next thing up is the last thing. It's the live tradings, live trade. Again, last week we did Lulu. We did the QQQ, which was a two-way play on QQQ. Still have time for that one to work out. Lulu, still have time for that to work out. And then I did Visa for the weekly. Visa went against us. No fun. But that happens. I'm looking to win 70% of the time, not 100%. All right, let's go ahead and jump in. Opening playbook trades. Monthly breakout. Again, last week I gave you Lululemon. I really like Lululemon. Opening playbook, Amazon's wrap for Friday. Greg, I'm not sure what you're asking there, but let's look at Walmart here. It's trading off the highs. I wonder. All right. Let me pull up Walmart here today. Look how look how strong this stock is. It's a very good stock right now, trading off the highs, up a little bit today. So we had this massive run up, pullback. I think at the very least, we're going to see it come back near the all-time highs for the month. So I'm going to do a monthly wrap order on this. Oh, moonshot trade. Yeah, that we'll follow up with that in the moonshot program, Gregory. Let's see. Amazon's up a little bit. We'll have an update for you there, Gregory, soon. All right, Walmart monthly breakout. So what I'm going to do here, and again, I think I'm going to start doing. So we did the Thursday opening playbooks, which is live tradings. I'm thinking about doing like a Tuesday training, a weekly Tuesday event where I'll rotate my different trainings, where it's wrap orders, elite orders, seasonal, how to pick seasonal stocks, how to fade markets. If you guys would like to do Tuesdays as well, where we're doing more of a training, maybe train on Newton. Give me a yes in the chat. I'm just curious. The live trading is fun. What we're doing today, I think it's really good, very beneficial. I also think the training could be fun. Give me a yes in the chat if you guys would like for me to add training to the weekly sort of regiment here. And there's not gonna be anything groundbreaking, revolutionary every week. I'm just gonna give you guys the same sort of materials and rotate it, probably 8 different training decks where we can just solidify these concepts together. Awesome. Tuesday study. Yeah, I like it. All right. Maybe we'll add that here next week or maybe next month. I'll have to check with Deanna on the schedule. But Walmart is my monthly breakout. Again, I really like it. I like it over the next month. We have earnings coming up on the 19th, so we're not going to want to hold through that. Good news is we don't have to. So I'm going to pick a month out from today, 7th of February. And then what I'm going to do is I'm just going to do a wrap order. So when you do a wrap order, and again, this will be something we cover in the trainings. You buy the one lower, sell the one higher. This isn't a great price here. It could be because let me see what we get for here. It's much better pricing with the monthly expiration. But what day did I say earnings was? The 20th. Maybe I'll take this and then we can, that's just going to keep the IV though. It's going to be the problem. All right, well, this is good. We'll do the 14th. Let me write this in my notebook here. Walmart monthly breakout. Here's what I'm going to do. Is the 14th Feb 25 expiration. I have a question here. Do I only do spreads? I don't only do spreads, but typically When I do one of these trainings for you guys, you'll see how much better the odds are. Why I prefer these wrap orders. Uh, you win way more and you win way bigger typically, so it's a no-brainer for me. But let me go ahead and type this in 91 call. I'm actually going to see what the 93. Let's see what this is. Okay, I like that. I'm going to buy the 92 call. I'm going to sell the 93 call. Currently about a 46-cent debit. And of course, Walmart's moving. So the price is going to keep moving on me. So it's 47 cents. The max profit's $1 over 47 cents. That's a 112% ROI. If Walmart gets above 93 over the next month, which again, that's a $1.50 move from here. That's about what, a 2% move from here. Not even a 1.5% move from here. So let me post this in the chat. They do have earnings on the 19th SM, so that's why I'm picking the 14th of February expiration. So we should expire before earnings. So I'll place one of these just to see if we get filled. That filled right away. Let me try the lower price. So typically I'll just kind of let these sit for a while especially because we're trading at 9 right at the open. I mean, we typically see some sort of crazy price swing. So like, let's keep in mind here, guys. This is what, let's look at the other day. Went raging at the open, came back. Here the other day, sold off crazy at the open, came back. So this is why I typically wait until maybe 10:30 to place my trades. I'm doing this live with you guys just to show you. So again, don't feel like you're missing out because Walmart's shooting straight up. There's probably a good chance it's going to pull back at some point. Get a little exhausted on the intraday. This is live, Aggie. We're going to buy below and sell above. That's right, David. Now, this is technically one strike out of the money, so I'm buying the 92, selling the 93 here, expecting that Walmart, again, the all-time highs are up here at 96. I just want Walmart to get back to here. Not even that big of a move. If Walmart gets here over the next 5 weeks, I will make 112% return on investment. Do you guys see how kind of crazy that is for people who are asking, why do I do spreads? Why do I do these wrap orders? So look, I have this much time. See where my crosshairs are? I have that much time for Walmart to get above there. And if I'm right, I get 112% return on investment. If you're trading normal calls, you're going to lose money doing that. The way we trade it, you blow it out of the water. It's great. It's awesome. So again, that is posted here in the chat. I'll go ahead and type it in here for anyone who missed it, just so you can see. So the options, we're doing the 14th Feb 25 expiration, buy 92 call, sell 93 call. This is I got filled at 49-cent debit. So that means profit potential is $1 over 0.49. It's 104% profit potential. And that's again, if Walmart gets above 93, which is $1.27 move from here, it's like a 1.4% move over the next month for lightning hot stock. If you want to do a profit target, say you want to do a 50% profit target, you would set a good till cancel order at 75 cents. This would give you 50% return on investment. So I'm in Walmart. Let me go ahead and set a good till cancel order. So I'm just going to do the opposite, or you could just right click on your position and say close position. But I'm going to select the price I want. So here I'm selecting 75 cents. I'm going to make it a limit order, and I'm not going to make it a day order. It's going to be GTC, which stands for good till canceled. Keep in mind, if you ever want to pull this off and want to sell Walmart early, make sure to cancel this order. Don't leave it open. But I'll go ahead and post this now. If Walmart gets to my, if it makes a move higher to 92.50, probably would be enough to get this pretty close to filling 92.75. I'll be able to automatically be filled. I don't even have to be at the computer. I could be out playing golf that day. And if Walmart hits that price, it'll fill automatically. So it's kind of cool. Do you get charged automatically after the 97 trial? No, we don't. I don't think we do any auto charges, Aggie. All right, monthly breakout was Walmart. The weekly momentum play, I'm going to double dip here just because I like it so much. I like the momentum on Lulu. I like the fact that discretionary stocks are very strong. They're the strongest seasonally for this month. Lulu's down today. I might switch it up. I posted this in last night. Let me see what I got on noon today. Also, if you have Newton, I posted in the chat. Oh my gosh, eBay. What news did eBay have? eBay's up 11% today. BSX up 5% today. Wow. Anyone know what happened with eBay? I wanted to do Lulu. Now I'm thinking maybe I won't double dip just because it's looking weak right now. Let's go ahead and take a look at the futures markets. Oh, I forgot to mention gold. Gold is something that I'm really interested in right now because it did. So if we look back, let me go farther. Gold's not super exciting. It was in this sideways trend for a long time. But then during kind of the inflationary years, and then when the Fed started talking, interest rate cuts and stuff, it went crazy. I also think that we're going to see a flight to safety here in gold. We're seeing it a little bit right now. I don't think we're done with this run in gold. I would think that gold by the end of this inflation cycle, which is the next 3 to 4 years, in my opinion, gold's going to be at 3,500. So gold's a good long-term investment. I'm actually going to go buy some more gold here in the next couple of weeks. I got a friend coming down who loves going gold shopping with me, so we're going to go do that together. It'll be fun. eBay listings on Meta. Oh, cool. Like Facebook Marketplace. Oh, wow, nice. So there's eBay for you. I love this stock. But I'm not going to trade it today. I'm not going to buy the news here. But that's pretty awesome. There is a recording. Let me go ahead and see what else we got. TRGP. This is a pretty good looking one. Let's see what we look like on no weekly options. This is an energy stock. Again, that's bullish right now. So if I go back to our sector seasonality here, energy is turning bullish right now. That one could be a good play. I'm going to keep digging. I think I just mentioned this and I can't remember, but I did update the Newton scanner if anyone wants, if anyone has Newton. The short scanner was having some errors for me. For you guys, actually, you were the ones that pointed it out. Let me. There's my breakout scanner. Citigroup earnings. Well, I don't want to force a weekly play here. I also don't love. I mean, we're still the small caps are what's getting hit. So if we're looking at the 5 minute charts, really not much, guys, on the futures market. Not much to go off of here. Russell's not looking good. Bitcoin's not looking good. This is just short term. Long term, I actually like the both of them, but right now, not looking great. Is there a fix on last week's V trade? No, Barry. I typically. So here was our V trade last week. We need it at 320 to hit our profit target. We're probably not going to get there. You can either just close it out. So right now, what did we enter at? Probably $1.25. You can close it out. Let me just close one just to show you guys. See if it'll fill. So I closed one out. So I'd salvage some of the losses there. But typically, Barry, if we have one that doesn't work out, I'll just let it go and I'll just play it again, play a new stock the next week. Again, I'm not looking to win every trade. I'm looking to put the odds on my side and win 7 out of every 10 trades, knowing that the risk to reward is about 100% on both sides. So over time, it should stack up nicely. All right. Anyone got a stock they like for the weekly trade? Maybe we'll do Meta. What's Meta at? I like Meta. Let's do Meta. Meta was my Apex signal trade. Let's take a look at Meta weekly options here. So we'll be looking at the 17th of January. Meta's an expensive stock, which is good for us because it needs a tiny, tiny move for us to double our money. So here, let's do Meta. Meta's a strong stock. I like it on the Apex. It's down today, but look at this move higher. It was really had a big flush out at the open and then came back. Not too bad. Tech is hot. So I'm going to go here to the trade tab. I'm going to select the weekly options for next week, not this week, not the ones expiring on Friday, but next Friday's expiration. I'm going to buy one lower, sell one higher, which wraps the current price of the stock. We should get around half the difference of the spread. So 125 is our ideal fill price here, which means we would double our money if Meta closes above 615 next week, We might need to move it because Meta's moving higher right now. But again, because it's a $600 stock, that's a dollar move on this. That's a tiny, tiny move. Point, what, 0.2%? It needs to gain 0.2% over a week for us to double our money. That's why I like it. So let me type this in here, and then I'll post it for you guys. Flipping over, not going to do Lulu. We still have Lulu open. I'm going to do Meta for the weekly momentum play. I'm going to do the 17th of January expiration. I'm going to post this in the chat too, guys. Don't worry. Meta is currently, let me see. See the current price. All right. We're going to buy the 612.5 call. We're going to sell the 615 call. That's going to be a debit of around, we want to look for 125. It's at 133 right now. I'll call it. Again, don't feel like you have to rush to get filled. If we did get filled at 133, that's an 87.9% profit potential week over week from a 0.2 move in the stock. Not even a full percent, not even a half percent. So let me just post this. I'm just going to do this. And I'll post it in the chat here too. Wherever my chat went, there it is. Brent, I mentioned update to Newton. Is it automatic or do we need physical? Brent, I said to automatically push it through when I submitted it to Schwab this morning. I don't know if they do that or not. I've had mixed results of it. Worst case, Brent, you're going to get a new link in the members portal where you can get that scanner update. All right, everyone get this trade. Let me go ahead and see if I can get filled here. This is Meta again. It's trading at 133. Filled right away at 133. Let's try 130. Again, I might wait a bit. Filled right again at 129. I might wait a little bit till 10:30, 11, and look to add more to this position. Again, guys, here's something I want you guys to keep in mind. Right now, I've just told you today, what was my general consensus? Is it that the markets are going higher or lower? Can I get a guess in the chat? Again, I don't know. I don't have a crystal ball, but generally, looking at the seasonals, looking at the technicals, do I think it's going higher or lower? Lower, right. What am I trading? I'm still trading bullishly, but I'm not going to do a $5,000 position here. I'm not going to do a $2,500 position. I'm probably going to put 500 bucks into Meta because I just like to swing the bat over and over again because I'm not always right. This could break out higher. I would like to make some money on that, but I'm also not going to stack the bag full and hope for the best when my senses tell me otherwise, right? Now, if we get a big flush out here, you might see me put on a $5,000 position on one of these weekly trades because I'm much more confident that there's more upside than downside. That said, I'm never not going to swing the bat. I don't really like sitting on the sidelines because markets will move without you and leave you in the dust. Does that make sense? Kind of that reasoning on position sizing? Why I'm still trading, even though I think overall that the markets should go lower. This is my first spread. When I right click on ask, Lulu, let's look. Oh, look, Meta just took a big drop, so you're going to get filled for way better now. You would sell the higher one and buy the lower one if that's what you're asking. Lulu, it's at 118 now, 115. All right, overnighter. This is a new one. I'm going to try and fade the markets. I don't even know where NVIDIA's at yet today. It is a vertical. Yes, Lulu, it is a vertical. Oh, wow. Meta just went to 609 back to 612. Hopefully you guys got filled for $1. Let's look at NVIDIA today. This is one I posted yesterday just because it was so ugly. Oh, it already made the move higher. This is something we'd like to fade. So this was yesterday's price action on NVIDIA. Just crazy, totally absurd. It opened at all-time highs and just puked all day. You typically see that selling pressure flip the other way the next day, which is what happened here on NVIDIA. Hopefully we didn't miss it. Markets are kind of sinking here. Let's see how we're looking on the 5 minute. Let's go 1 minute. Just see. Yeah, we're just drifting lower at the moment. Not a ton of direction, but not a lot of strength either. Actually, no strength, to be clear. Alrighty. What do you guys like for an overnight trade? And again, it has to have weekly options. I'm thinking about trading a strong stock. That might be lagging a bit. Okay. No weekly options. Oh, Citigroup. Carson, tomorrow is a holiday. Yep. So these are basically going to be 1 day till expiration. Because tomorrow's a holiday, so tomorrow's gonna be closed. So it's almost like we're Thursday right now, trading into Friday. Wendy, I'm hoping is asking if I think Nvidia will be up or dip more next week. I hope it's up. I don't know. I mean, again, everything's showing to me that we should see markets cool off or continue to cool off a bit. Um, I'm still very bullish on this stock though. Um, I like Citigroup right now. Let's see, one, two, three. I like to count the down days to an up day. So here's a one, two, three to up, one, two to up. That's a big puke though. One, two up, just to see my odds of fading it, if that makes sense. So we have two. It's not even a down day up here. That's a big day up. Fox A could be another good one. That's Fox. All right, I'm just gonna have some fun here. Actually, this one's too cheap for me. Anyone have any stock they're loving right now? That you think is going to go higher tomorrow or Friday? You can trade these as a momentum. Yes, you can do that. Um, you can trade them as momentum breakout. Oops, wrong thing. Or you can fade them. Either way. With the markets down, I'd like to do something in tandem with the markets. Actually, we could even do the NASDAQ potentially, but I probably would wait till later in the day to put it on. Or the Russell could be another good one. High risk, high reward. Let me just go to IWM. So here you see like the big hit down lower. You can see a pop back higher, but again, this one's just been taking a beating. That's why I said last week it's on the rate news. It's taking a hit. I'm waiting for the Ethereum to get options. That'd be cool. AMD. Oh, that could be a fun one. Who wants to do AMD? I'm gonna take a robe. Oh wow. This one's a good momentum play. Let's see if it has oh, ANET's a good one too. Oh, ANET's a really good one. All right, I'm gonna do ANET. It's expensive enough stock to move outside the strikes. So basically what I'm going to do here is make a trade, a bet that ANET's going to move higher. What are these strikes? 0.75 strikes. I wonder if it was from the split, I bet. All right, I'm going to try this. So what I'm going to do here, I'm going to give it to you guys. Let me type it in. This is a binary result, basically. Uh, we're basically betting that the stock will go higher tomorrow. It doesn't need to go much higher. It needs to go 49 cents higher because I'm going to do the 115 strike. If it's above, if it gains more than 49 cents, which is about a 0.4% move from here, we should make some pretty good coin on it. Let me type this up for you guys. So it'll be the 10th of January expiration. I'm going to be buying the 113.75 call, which is a weird strike, but it's because of split. Selling the 115 call. Right now, that is trading at a 0.68 debit, which means my max profit is 1. No, what is it? Yeah, 1.25 is the max profit. So if it's trading at 65 cents, 65 cents divided by 1. Oh, I did it backwards. Not a number. 125 divided by 65 minus 1. That's a 92% profit potential. If ANET gains barely, actually, it's already, if ANET gains 8 cents by tomorrow. So here's the trade on ANET. This is going to be our overnight play. You can take what you learned here and apply it to other stocks. Basically, let me pull ANET back up wherever my Thinkorswim went. Let me place this. It's at 70 cents. Again, I'm just going to place it just to show you guys if it'll fill. We're basically just betting that ANET, because it's had 2 bad down days, hopefully it gets some relief. Test, it may drop. You're right. Be patient with your orders. But all we're doing, look, if ANET closes above here tomorrow, do you see this? Where my cursor is? 115, basically where it is now. If it moves a little bit higher tomorrow, we should make about 90% return on investment. That's the power of using these short-term debit spreads. Now, again, we have to be right on the direction. It can't stay flat. It can't go down. It has to pop higher, but not that much higher. It's not like typically with a call, you needed to go up here for you to make 80%. With these spreads, we're able to do it where it's barely even moving. It's already at 115. We'll see if I feel. I'm going to let it sit though. Like I told you guys. Yeah, it's already moving way higher now. That's almost at max profit. You do not want to get filled there. Don't. I would not get filled higher than 75 cents. So just let it sit. If we miss it this week, we'll try one next week. So it filled at 75 cents. So at 75 cents, my max profit is a lot lower, but still a 67% return if ANET stays flat here at the current price tomorrow. Anyways, that's kind of a wrap here for the trading. I'm gonna do a quick Q&A here and then give you guys a little bit of an NVIDIA update. Any questions real quick before I move onwards? And then we'll wrap it up here. It's 10 o'clock. I gotta get out of here. All right, let me go ahead and pull this up. Before we log off, let's see. If it goes higher to 115 expiration, do we still see the gains or has it go higher after? Nanil just by Friday at the close. Again, tomorrow's close. So that's basically tomorrow. Stock market is closed tomorrow. So again, it just has to be above 115 by tomorrow at the close. If it's up at or Friday at the close, I keep saying tomorrow, same principle. If you wake up and we're at 117, you might exit early, take some profits. Nothing wrong with that, right? If you want to wait till the close, you can do that. Now, before we log off, I have some very important that I want to share with you. NVIDIA had their big announcement earlier this week. I told you guys about that. The stock opened at all-time highs. We saw it take some losses from there. But again, very strong stock, a lot of potential. It's up nicely today. And I believe that this new breakthrough, actually, there's a lot more coming out, a lot more rumors about NVIDIA actually producing their own computer, trying to compete with Microsoft, trying to compete with Apple. That would be huge. I think we're going to see some more acceleration cycles along the way. So that means I'm talking about the most bullish breakouts on one of the most powerful stocks in the world, NVIDIA. Everybody loves NVIDIA. Now, thanks to many months spent researching, extensive backtesting, and late nights working out the kinks, my team and I have found a way to isolate these acceleration cycles on NVIDIA over and over again. And right now we're in one. I'm hoping that we will continue to see it through next week so we can target these over and over again. Now, all we do is wait for my custom coded candlesticks to flip from red to green. If you have Newton, this probably looks familiar. And then we can place a quick trade. And when they've worked out, they've shown the power to pay doubles, even triples time and time again. For example, let's look at the acceleration cycle that happened back in October of 2022. So at the time, NVIDIA was way down. Nothing like what we've seen right now of NVIDIA. Red, red, red candles because the momentum was red. And most investors probably wouldn't have touched the stock. But right on time, NVIDIA's candle flipped from red to green. That means an explosive acceleration cycle was about to kick off on the stock. And anyone who would have taken 2 quick minutes to set the trade could have come back to a 215% gain. Again, you applying some of these options that we've been talking about today and selecting the right ones. That's how it's been able to produce these kinds of gains. How about the acceleration cycle back in February? When all the talking heads were calling it overbought, due for a pullback, my indicators picked up on an acceleration cycle kicking off on NVIDIA. That didn't mean one thing, that meant 2 things. Number 1, there was a really good chance that NVIDIA was about to rip higher. And number 2, folks waiting on a pullback would never be able to buy NVIDIA for 70 bucks again. It's 140 right now. It's twice what it was back here. Had anyone taken advantage of this NVIDIA acceleration cycle the way I trade it, they could have seen a 339% gain on the options. And again, guys, tomorrow the markets are closed. Friday, they are open. If we are still green on Friday, I am doing another NVIDIA trade just like this one. I want you guys to be able to follow along with it. The next acceleration cycle rolled around just days later. And anyone who took advantage of it could have seen more than a triple. Again, 209% gain there on the options. So 500 bucks plopped in that first one, could have paid 1,695 in profit. If you had 5,000 invested, we're talking about $16,950 in profit. Money that could go towards a lot of good things in life or just saving money. Nothing's wrong with saving some cash. And it's not like we're talking about buying NVIDIA 10 years ago when it was only $10 a share. Those results could have come just a few weeks ago, just recently. We've been hitting it out of the park. And that's how powerful these NVIDIA acceleration cycles can be. So let me show you how it works and how you could get in on the newest signal right away without breaking the bank. You may have noticed that the candles on my chart are either red, yellow, or green. Again, if you have Newton, you know what I'm talking about. If you saw earlier in this presentation when I had Newton up, you know what I'm talking about. That's a custom code I developed to map out these acceleration cycles on NVIDIA with a quick glance. So just by looking at the colors of the candlesticks, we can easily tell if we're in a trade, if we're on deck, which would be yellow, or if we're out of the trade completely, which would be red. Now, these acceleration cycles are so powerful that they've been able to take the profit potential sky high. In essence, my system is designed to hone in on the most bullish moments for NVIDIA and cut out that garbage time in between. We want to only trade the best moments. Now, I'll cover all the finer details in just a moment, plus give a handful of you a chance to download a copy for yourself and get in on the newest trades. But first, to show you how it's worked in all market environments, let's go back to 2020. You guys remember the COVID lockdown. Most people were terrified of the stock market, and for good reason, too. But I promise you that this strategy doesn't care about what's going on in the world. It only tracks these high probability acceleration cycles on NVIDIA. And so here you see it right on time. My custom candles flip from red to green. Green means buy, and that's a clear-cut entry for us. Now, had you seen that signal and placed a trade the way I like to take advantage of it, you could have pocketed 253% gain on NVIDIA. And after taking profits when we hit the optimized target, anyone could have easily checked in and saw that we were still in an NVIDIA acceleration cycle, as the custom coded candles were still bright green. This is what I'm hoping to see tomorrow. Continuation of the bright green candles, meaning we can do it again. Anyone who would have followed along here could have seen a 138% gain. And on as NVIDIA recovered after the pandemic, my indicators picked up on each and every acceleration cycle along the way. But if you think that's good, wait until you see this. These custom indicators are so good at pinpointing these acceleration cycles on NVIDIA that it actually would have kept you out of the bear market completely, minus one quick loser. Losers happen, but look at that. That 60% downturn, you would not have seen the bulk of that. And then it would have got you in at the lows, an extremely well-timed buy, one that would have ended up paying out 215% in 11 days. But it gets even sweeter because, as I'll show you in a moment, folks could have actually turned these red sections, these downtrending sections, into monster returns as well, just by trading the puts. So, I mean, buying at the bottom is one thing, right? But essentially avoiding that meltdown altogether and then profiting from it, that might be even better. Now, I realize those are some big results, but I'm a big results type of trader. 2021, I doubled my Robinhood account. There you see the result, posting north of a $30,000 profit, 115% return on my account. Last year, I doubled my 25K account again. I did about 40,000 in profit nearly. So more than doubled it there. And some of my very best trades actually came from trading NVIDIA itself. There you see my real money results. Now, my hope is that today you can join in on the action too. Now, luckily, with my custom indicators monitoring NVIDIA around the clock, we don't have to wait years to see some remarkable results. Here's one back in March of last year, 118%. And the one the week following it, 273%. Guys, if you're comparing that to trading the stock itself, it's 26 times the bang for the buck. You would have had $750 if you traded the stock, $19,000 if you traded the options the way I do, which is kind of what some of my students have been saying. These are some of the top stories. Charles Beaton did $19,000 in a month. Jack M did $25,000. So really powerful stuff here. And trust me, you don't want to miss out on the next trade going out. It's going to be Friday. Again, I'll check in, make sure that the signal is still green. We can still enter. But here's our live trade tracker so far. 74% hit rate. Again, I'm not looking to win every trade. I want to win about 70% of them. We've been doing that. Hitting with a 74% win rate. Average winners nearly 100%. And over the course of the first year, if someone started with 5K, not compounding, nothing crazy, we're looking at $58,000 in profits in the model portfolio. Again, no fancy math here. Nothing crazy going on, just being basic and staying consistent. That's a 401% account growth over the year. And folks have been crushing it too. David S. made $3,000 on a trade. Roger S. made $4,000 on a trade. Jennifer made $5,000 on one of our NVIDIA trades as well. And that's why today I want to invite you to take the next trade with me without breaking the bank. We've got a 60-minute special going on today. It's actually going to be like 59 or 51 minutes now because I've taken too long. You're not going to see this deal anywhere else. We're only doing it for the opening playbook session. So this is the only place in the world that pairs these high-powered acceleration cycles with the elite options to target triple-digit moves. Again, I'm going to give you the entries. I'm going to give you the charts. I'm going to show you when momentum is green, and I'll give you the options too, just like you could have seen back in January. 261% gain there. And then the next week, 212% gain. Someone had $1,000 in that first one and rolled into the second. We're looking at $8,143 in 1 month. Now, of course, this should be an expensive program. It is an expensive program, but we have an opening playbook special. So today you're going to see something that you've never seen before. Of course, I'm going to cover all the basics of the elite trade. I'm going to give you the options crash course, and I'm going to do my satisfaction guarantee where you get to set the standard for satisfaction. If after your first 100 days, if you don't love it, you can call and get your money back. There's no sweat to this right now. As a bonus, I'm also going to give you the double dip downturns. Remember, I told you when momentum's negative, we can trade it to the downside just by flipping to puts. Here were the results in the 2022 bear market. Here are the results in 2018, 181% gain to the downside. Also, as a member, you're going to get the earnings trade rooms 4 times a year. We're going to trade it live together. This is fun. We've had some pretty awesome results from the live trade room. You're going to get to do that for free joining in with us. Now, remember, folks who stuck to the system, never risking too much, never going all in on a long shot without compounding a single penny. If you start with 5K, we're looking at $58,221 in profit over the first year. This isn't a back test. This is trades that I sent out, trades that I took, and you could have followed along. If you start with $1,000, you're still looking at $12,000 in profit. Pretty awesome stuff. So you obviously get to decide your risk for it, but I'm just showing you how we performed over the first year. That's 74% win rate. So as you probably know, if you've seen this before, we've been running it at $1,839 per year. So we're running it for this week right now. It's worth every penny. Still a steal of a deal in my opinion. But because you joined me this morning, I'm going to offer you a one-time special. I want to give you a taste of NVIDIA Elite without breaking the bank, knowing that once you get your hands on these trades, you'll want more down the road. So this is a 60-minute flash sale. After that, the deal is done for. I'm cutting the price down dramatically. I'm going to give you a quarter. I'm going to give you 3 months of access to get a taste of NVIDIA Elite. So it's not going to cost you $2,000 to join. I'm going to break down the price for just a fraction of an entry. Keep in mind, the profit over that first year was $58,221. So this is a very, very high-powered strategy, high-powered system. It's not going to be thousands of dollars, not even going to be 1839 like we're running right now. For the next 60 minutes, you can get this elite trading experience for only $495 for 3 months of access. It's not going to auto bill you after that, nothing crazy like that. I just want you to be able to get a taste of these NVIDIA Elite trades without breaking the bank. I'm hoping that new trade tomorrow, it's actually Friday because the markets are closed tomorrow. I'm hoping that new trade will cover this fee right away. If you start with about $300 to $400 invested and we win, it should cover the cost of your subscription. So go ahead and go to prosperitypub.com/495. I'll post a link here in the chat. This is the only place you can get it. I believe we have about 45 minutes left on this deal. That link will let me click it. 46 minutes left on the deal. Again, it's the only place you can get it. If you want to call someone, give us a call, 321-888-3962. They can get you taken care of. Or just click that link I've posted in the chat. Again, new trade will come on Friday, assuming we are still in a bullish momentum cycle. $495 special. We've never done this before. It's good for the folks in this room right now. There's a timer on the page. It's going to be gone here by 11 a.m. It's just a quick flash deal for those of you who joined this morning. Thank you for coming. Hopefully you got some value this morning. Hopefully you learned some things. And hopefully you take me up on this. It's been a whale of an experience so far. The current students seem to be loving it. Our trade tracker speaks for itself. So I'm hoping more folks can join in and tag along for it. Now, let me answer some common questions, and I'm going to answer the rest of the questions in the chat. How much money is needed? It's around $100 a trade. Some of them are even cheaper. You don't need a big account to do it. You can start small. You can scale over time. Is every trade going to be a winner? No, guys. There's going to be winners. There's going to be losers. Right now, we're winning 74% of the time. Should you be worried about more downside in the markets this year? You could be. I know I am a little bit, but that's the beauty of this system. If we do get downside, we just flip to puts. We just wait for the candles to turn red, which means we get a bearish entry. And those are going to be included for free. You can trade this in any normal account. You can even do it in a retirement account if you want to. The new trade is going to be shared with members on Friday. All right. So if you take me up on this deal, you can get access on Friday. All right. Yes, you can enter the current trade if you want to. It's going to be more of an overnighter move. Lulu, to answer your question, just because it expires, it expires on Friday, but you can still do it. Todd, more like wraps, yes. Here's my price targets for NVIDIA. They've stayed the same for over the last almost, I don't know, 6 months. On the August 6th class, we did that buy the dip. We nailed it. I said price target 125, nailed it. 150, we hit that a few weeks back, then we just hit it yesterday. My next profit target is $200. I think there's a 60% chance we get there. That would be about a what 33% gain from here. So still a lot of upside here. Again, new trade as soon as this week. The trades will come Friday mornings for you guys. Let me go ahead and post this in the chat again. Friday mornings, again, I like to wait till about 11 a.m. Just so the markets can settle a bit. I don't like jumping in at the opening bell, even though I did that for you guys today, just to show you guys. I typically like to wait for the markets to settle. If you're currently a member, would this extend your membership for 3 months? Yes, Mike. It should add on 3 months to your membership if you're currently a member and you want to add to your subscription. These trades always go on Fridays unless the markets are closed on Friday. Yes, if you guys want Newton, you can actually get it. If you become a lifetime member of NVIDIA Elite, I include it for free. That was kind of the special founding deal we had for folks. It was not actually available to the public separately. It used to be just only for the NVIDIA Elite lifetime members, so I've kind of grandfathered them into that. Again, guys, click that link in the chat or give us a call to get started. I'll post it one more time. Deanna, if you posted it on YouTube, that'd be awesome. If not, no worries. Is this a toll-free call? I'm not sure, Nico. I'm not savvy to that information. I assume it's a toll-free call. I've never heard of it being one that costs money, but I could be wrong. Awesome. Well, again, I'm going to leave this up here for a bit. I'm going to jump off here. I went 17 minutes over my anticipated time. If you guys had fun today, if you learned something, if you enjoyed the trades, give me some feedback. If you hated the trades, give me some feedback. Again, I'm going to look into doing that Tuesday training sessions just so we can solidify some of these processes. Thank you, Nanil. Nine. I hope I'm pronouncing it correctly. Awesome. Yes, thank you guys. Again, I didn't get to see the chat on YouTube. Deanna, I don't know if there was anything I missed there, but I'm just going to leave this slide up. Appreciate you all for being here today. Would love for you to take part in this NVIDIA deal we've got going on. New trade should come on Friday. If not, no worries. We'll be back at it again next week for another opening bell trade room. Awesome. Well, I'll be in Telegram, guys. Make sure you join if you're not in Telegram. See you guys.